for following the markets with us on markets midday. Well, the mid-cap index is up around 3/4. The Sensex just about 62 points. We've been in that range, 62 to 100. Nifty manages to cross 5100, but we just kind of slide back. If you're looking for three groups of stocks with strong technicals right now, hotels, Indian hotels, Hotel Leela, Royal Orchid, take a look at all of them. Very strong for the last couple of days. Today, multiplexes are strong. I don't know if it's POW or anything else, but anyway, you may want to watch that. Anyway, it's running on technical charts, so enjoy the charts. PVR, Cinemax, Fame, and of course, pharmaceuticals and media doing exceedingly well. But on all of this rests the US dollar because the carry trade was driven by it. Jamal Mecklai is the CEO of Mecklai Financial Services. He joins us right now. Jamal, as usual, thanks for joining us. You know, I'm not going to ask you so much about what finally is the uni direction because the whole world's tilting towards the dollar going down. But if it starts to reverse, how quickly could it turn into a stampede and how quickly could it appreciate, basically putting all the edges, all the trades in jeopardy? Is that a possibility that we got to look out for? And how real do you think it is if you had to just take a percentage pick, 90%, 100%, 70%?
It's very hard to pick a number, a percentage, but I think fundamentally, you know, the dollar has been falling since 2002, right? The DXY was 120, it is now, it got to a bottom of 70, it's about 75 right now. Now, my point is that nothing in the world moves in one direction forever. So at some point, the dollar is going to turn. Now, I'm not saying it's going to happen tomorrow, whether it's going to happen in 2 months, it's going to happen, it may happen next year. But when I say turn, I'm not talking about, you know, a correction from 75 to 80. I'm saying where there is a complete change in mindset, right? What will drive it? I have no idea. And I'll give you an example. In fact, in 2001, 2002, you know, you probably remember it. I don't know if you were around at that time. But the dollar was just strong and strong and strong. The euro had just been born. Nobody wanted the yen because Japan was in a mess. Gold was flat on its back. And the only game in town was the dollar. And nobody could visualize, you know, that the dollar would ever be at 1.50 to the euro or $150 to the euro. So today, you know, your 150 is the norm, 140 is the norm. I mean, can anybody think of $1.10 to the euro? I'm not saying it's going to happen. But what I'm saying is that at some point it's going to happen. And I'm saying that that is the real, if you're thinking in terms of managing risk, that's really what you need to think about. Now, coming specifically to your question, that how fast can it happen? I mean, how far can it go? How fast can it happen? And what will happen to the market? Hey, I don't know. But clearly, if something dramatic happens, a lot of people are going to get their pants taken off. So I think that, you know, you really need to position yourself, you know, use options, you know. Long-term risk is very difficult to think about and manage. Short-term, TK, you can live with it. You buy options, cost you a little bit of money. So I guess the reason I'm thinking about it, it's interesting you brought up the same question, is it's been so long that the dollar has been falling. And everybody, as you said, expects it to keep weakening. Markets tend to surprise a lot of people.
Well, to expect that in the long term, the dollar will have to stop falling is helpful, but it'll be even more helpful if you can give us an idea of what you are personally expecting in the next 6 months or even in 2010. How would you position yourself for possible dollar corrections or reversals? And I mean, you have to give an idea of what are the chances that that reversal might come. Are you expecting something dramatic in perhaps March or April when quantitative easing might end from the US Fed? How would you advise an importer or an exporter to position himself as of March 31 or as of June 30th, 2010?
See, advising an importer or exporter is pretty straightforward. You know, I mean, the market is the last thing you should look at. What you should look at is what are your benchmarks, what is the price you're getting today. If you're getting a good price, hedge it with options and manage your risk. So that's very easy. It has nothing to do with the market. I mean, this is really the problem, is that people think about the market and then look at their business. They should be thinking about their business and then look at the market. Now, for academic discussion and, you know, to be a movie star on your channel, I can tell you anything. You know, what is going to happen, what is the percentage chance, etc., etc. In fact, I've been thinking, that 2010 is going to be a very, very, very dramatic year. And I do believe something
Jamal, even if we take a look at fundamentals, some would say, expected power production in India gets more valuation than existing power production in the US. Expected chartwala in India gets more valuation than a McDonald's in the US. Some would start saying that common sense would dictate that in the next 1 or 2 or 3 years, capital inflows start going back into the US rather than out of the US, whether it's in real estate or stocks or anything else. So, just looking at the fundamentals of how the world's moving, some would say at one point somebody's going to say Empress has got no clothes, so perhaps we've got to move back to the US. Do you think that's a likelihood anytime soon?
See, I think that, the way it would happen is there will have to be something dramatic that turns things, and then then the sentiment will change and the US will look great. It doesn't, I don't think it happens that, let me start moving to the, I think first something has to happen to change turn the tide. And there's lots of things, on boiling, right? There's China, they're going to start revaluing, for example. To me, one of the real key things is going to be this whole Afghanistan, Pakistan, India play. And I think next year is going to see a lot of action over there. And I think that if something positive comes out of there, you could see a renewal of American vigor in the world, because America will clearly be behind that. So I'm saying that the factors that will bring about the change could be any. They could be infinite, right? Your point, but I don't think that when you say money is going to flow back into the US, at the cost of India, I don't think so. I think the India play is permanent, So I think we are going to, earlier you had asked what is going to be the impact on the rupee. Let us say the dollar does turn. Of course it's going to affect the rupee. But my sense is it will affect the rupee less. The rupee will weaken less than currencies which have been really simply riding high on the weak dollar, like the Aussie dollar, et cetera, et cetera, et cetera. So I think, sorry, I don't have a specific forecast. The only thing I could say for sure is volatility will remain high. So if you buy options to hedge your position, you're likely making money on the options as well.
All right, Jamal, interesting chat. Thank you very much for joining us. All right, time to take a break. We get a big brokerage views on the steel sector after this break.